Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for August 22nd, 2018. So yesterday we had those bulls go ahead and push on through. They really tried yesterday, but we kind of ended the day with a stalemate. As you can see here on the diamonds, we pushed above that resistance level here in March. But doggone, those bears pushed back before the end of the day, closing us almost back down where we started the day, leaving a shooting star pattern. And if we look further, let's take a look at the SPY. The SPY also crossed over that all-time high, printed a new record high, and then ended up losing it by the end of the day, closing back down below that resistance level and printing that shooting star pattern that should give us a little bit of a pause today. It doesn't, a lot of folks read too much into a single candle pattern. They'll look at a shooting star and believe there's reason for panic. But let's remember that every candle pattern is very short term in nature. It's a signal is short-term in nature, and it's going to require, for this to be bearish, it's going to require follow-through. Now, obviously, we don't have to have a follow-through like that, but we need to have some kind of a follow-through. It is entirely possible that a shooting star pattern is just the lead up into a consolidation. So don't panic over a shooting star until we see some kind of price action that would confirm that shooting star to be accurate. If we look at the futures this morning are flat to just slightly bearish. Not much going on here in the market. We had a big push down last evening. If you check the futures, we were down 120 some points or better, and we've responded back all the way back up during the night. European markets are mixed, and Asian markets closed mixed. So we have this little bit of a pause here maybe in the market. Now, first off, I'm just going to go to the Dow here, a Dow chart, and have everyone recognize that we have, since last Wednesday, rallied about 850 points in the Dow. Okay, so if you look over there on the very left, that little measurement over there, about 850 points from last Wednesday's low. So a pause, a consolidation, a rest would not be out of the question. So don't just run for the hills in panic just yet because of that shooting star, but there is reason for concern, and we should approach the market today with a little bit of caution, watching price action closely. That follow through could cause us some problems, and we're going to have to be a little bit careful of that. So another place we want to stay focused to is the Qs. Now, yesterday I said I thought the Qs was probably the most vulnerable to a problem, and you can see we did push higher yesterday, but now also putting in that shooting star type pattern. And I want you to recognize that we're very close to these trends. Right here we've got our Qs trend, and it really wouldn't take much to push us down or break us down below that trend, and possibly even break us down through this little price support that's underneath here. So we're going to have to watch that fairly closely. If we go back and take a look at the SPY, you'll see that the SPY is also very close to this trend, at least as I have it drawn. You could draw it differently. And it wouldn't take much to really start breaking down that trend. Let's hope that doesn't occur, but we do want to recognize that as a possibility. Only the IWM managed to hold on to a strong move yesterday, and moved up quite strongly, and stayed up there by the end of the day. So IWM breaking through to new record highs and closing up there for today. Now, a pullback Well, let's just say it's not as a pullback today. It looks like we're getting to that resistance breakout line also is a concern, but it won't be much of a concern unless we get either like an inside day or a bearish engulfing candle to reverse that. That would be a problem. So just a little pullback or a little rest that holds in or around these highs is really not a problem at all for IWM. So we need to see that kind of hang in there as well. Let's take a look at the VIX. Now the VIX yesterday started giving us a little bit of a signal here. Nothing major, but we do have an engulfing pattern here. An engulfing pattern right near support on the VIX, indicating that maybe fear might creep up just a little bit. So nothing here to be panicked over, but just a little indication that a little fear might be creeping into the market as we battle it out here at these resistance highs. Now remember, what I'm talking about here is not in any way, shape, or form trying to predict that the market's going to go down or go up. What I'm trying to point out here is we're kind of at a stalemate here in the market, and we need to approach the market with a little bit of caution today. And what that means to me is if I have profits and we're at that inflection point, if I have profits in my account, I want to start looking at trimming some of those profits, putting that money in my bank where they can't take it away from me, and then reducing my activity. Reducing my trading activity until I start seeing good, clear signals of direction. And that could happen at any time. But remember, a consolidation at the highs could last for, who knows, it could last for weeks. So there's no particular reason to be really, really active here, and there's no particular reason to be running in panic either. Let's take a look at T21. 22. That 4-week new high, new low ratio is where we kind of see that problem creeping up here. We're up here in this bearish reversal zone, and if you look at this, you can see how consistent this can be. Once we get up into this area, we want to be really watchful of that potential bearish resistance area to take over. We do still have some room to move to the upside. I don't want anybody to think that we cannot move up. We certainly can move up from here, but there's probably a lot more reason to be watching this for the potential of a pullback here in the next few days. So watch that closely. If those bulls grab a hold and push us up, that's wonderful. Just watch it as we move up here toward those highs in T21-22, that a pullback is likely to occur at any time. Let's go back here and take a look at the economic calendar. Our economic calendar today, we've had a light week, but that changes today. Existing home sales at 10 a.m. Now they're expecting that to show just a little improvement today, so that could help the market, maybe help support the bulls here a little bit if that number does come in strong. The petroleum status report, that is not forecast forward, but obviously that's going to be really important. We need all those oil stocks and oil companies to continue to maintain price if we're going to hold the market up, and any kind of build in supplies can definitely have them drift south, so we want to watch that closely. And then the Mac Daddy report today is going to be the FOMC minutes. It's not out of the question. We could see a morning rush this morning with a lot of activity, and then the market just kind of stall and pause as it waits for that FOMC. Volumes have already been pretty light, and that's very typical for August. A lot of vacations, a lot of traders gone, and that'll typically give us some lighter volume. Today we might see that really light, choppy price action after the morning rush here as we wait for the FOMC minutes. So kind of keep that in mind. It certainly does not have to do that. It's just a very common thing that we just kind of get light and choppy as we head into a big news report like that. So stay focused on that price action. Be really, really careful and cautious how you approach the market today. Be safe. Protect yourself. Remember, we don't have to fight the market every day. We don't have to trade every day to be successful. We want to make sure and trade when the odds are in our favor. And right now, the odds are starting to get a little bit sketchy here. So you'll want to watch that closely and maybe temper your trading activity just slightly until some direction is established. Let's take a quick look here on the earnings calendar today. We didn't have a whole lot of companies reporting, but we do have some name companies reporting. Lowe's has already reported this morning, and Lowe's missed on their earnings report, and you can see it's suffering here just a little bit this morning, gapping down. But then Target stores reported extremely strong earnings, gapping clear up here. So I guess maybe Amazon isn't killing all the retail stores, huh? Nice strong report, and Target moving up sharply here this morning. So lots of back and forth going on, and we've got quite a few more reports coming out today, 25, 30 reports coming out today. So kind of stay focused on that. Everyone, I want to wish you a fantastic day. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Follow me button on Facebook. Click those thumbs up buttons and drop a comment. I always appreciate those notes. And if I can be of help, please let me know. Also, please feel free to share this video with any friends and family. Everyone, have an awesome, awesome day. Be safe. Take some profits. And we'll talk to you all very soon, bright and early Thursday morning. Take care, everyone.